for coming and joining us this afternoon for our panel, Silicon Valley and Wall Street Meet Bitcoin. I think it's important to have each and every single one of our speakers on here introduce themselves, so we'll have them do that. With Harry Yeh first.
I am one of the moderators. My name is Harry Yeh, managing partner at Vigna Financial.
Michael Casey, and I'm a columnist at the Wall Street Journal and a co-author of a cryptocurrency.
I'm Draper, engineering manager at Coinbase, also created Litecoin.
That's awesome. you're like, it's like the side, you're like, oh yeah, I also created Litecoin, the second largest digital currency. My name is Adam Draper, managing director of Boost VC, the leading Bitcoin accelerator.
I am Paul Vigna. I am a reporter. I'm tech savvy. I am Paul Vigna. I am a reporter at the Wall Street Journal, and I am Mike's co-author on the book that's over there.
Will O'Brien. I'm a mentor here at Boost, this tribe. I was founding CEO of BitGo.
And I'm Tina Hui, the CEO and founder of Follow Coin. Welcome to this afternoon's panel discussion. It's wonderful to have two people from the East Coast come and meet all of us on the West Coast and let us know what is happening in the ecosystem. And before that, we do have a special surprise that Bitfury Capital was kind enough to actually donate one book per Boost startup. And so do come with your teams, maybe get the book signed after this event.
Yeah.
I didn't even tell you, so surprise!
Yeah.
5 books.
Well, that's very kind of you, Bitfury Capital.
So thank you, Vigna, for sponsoring those books. And of course, we are going to have 2 books that Michael and Paul can give away. You have to answer a question, and whoever is in the audience that gets the answer right will be able to get a book and get it signed for them as well.
I forgot to tell you, Mike, we're supposed to come up with trivia questions.
Is the question like, what happened on page 102?
The rules of cricket? Can I do that? You can do the rules of cricket.
No, Bitcoin related, please. Okay, so without further ado, I guess it would be interesting to hear, we understand that Wall Street is actually coming and embracing Bitcoin from what you guys have been saying in Wall Street Journal, right? So since you guys are writers, and you had an article on a Monday 2 weeks ago that embraced that thought. Would you guys lead a discussion about that?
Yeah, it's interesting. I don't know if I would use the adjective or use the word embrace. They have changed their opinion on it. They believe that it's a thing now, and they are. And much like any time Wall Street thinks that there's a thing out there, they want to understand it and figure out how they can make some money off it. So you're starting to see the mindset change on the street.
Reach the point of full embrace yet, but and this is what we've been writing about. You're starting to see small amounts of money be invested in it, in the millions. I mean, not small, relatively speaking. You're starting to see people leave jobs and go to Bitcoin startups. So money and mind power is starting to move. But again, it's very early. It's very small. It's only within the last couple of months that this is really starting to happen. And one of the things I thought was really interesting is a year ago you could not get anybody to even admit that Bitcoin was a currency, that it was a legitimate thing, And then when this year ended and Bitcoin's price had gone down so much, people said, "Oh my God, it's the worst performing currency. Look at it." And I would say to people, well, you just said it's a currency. A year ago, you wouldn't even say it's a currency. Now you're at least saying it's a currency. So it's like that. It's slowly the mindset is changing.
But what companies do you guys see entering the space?
Well, the New York Stock Exchange, of course, has put chunk of money into Coinbase. BBVA, the BBVA Ventures, the gigantic Spanish bank. USAA, important player in financial services, largely for military staff and veterans, is quite actively involved. In private play, right? They're doing doing some mentoring work down there in the BBB.
Yeah.
Right? And City Ventures as well.
Right, City Ventures, plug and play is an interesting thing.
So the venture arms of a lot of the banks are starting to find investments in it. But it's also the engagement level. So clearly with NYC investing in Coinbase, there's this sense that they're going to be, obviously there's a technological transfer aspect to that with Coinbase. NASDAQ now with John Betts and Noble Markets, that's not an investment, but it's certainly the fact that they're lending their technology to sophisticated Bitcoin exchange for institutional users there. That's on that level. I think this, just as interesting though, is the figures who've left Wall Street to go off and form their startup. So probably the most important to watch passively is Digital Asset Holdings. So Blythe Masters, anyway, you know who she is. She's effectively the inventor of the credit default swap. Not really as important as inventing Litecoin, but she invented credit default swaps. Has left JP Morgan, where she notorious reputation, but nonetheless she's a very interesting, smart person. She's the CEO of Digital Asset Holdings, which is a little vague what they're doing, but largely it is a service around the settlement of securities and money for digital value, which includes Bitcoin and cryptocurrencies, but is clearly also designed around the notion that you will create digital tokens of value on the blockchain and use that as a way to create real-time settlement. If any of you know anything about DTCC or SWIFT and all the sort of arcane aspects of how money is cleared and settled and transferred around the world, the holy grail is real-time, making sure that you don't have to go through all these stages and you don't have to carry the risk of 3 days of waiting until you know that you're actually going to get your money or your securities delivered. These guys are trying to reach that via blockchain technology. That is a transformative thing for Wall Street. And so I think that's a key thing to think about. It's not just about embracing Bitcoin and calling it a currency, it's actually about forming the structure of the settlement system.
And on the West Coast, what do you guys think is kind of emerging here? You know, like, do you see how West Coast companies are playing with East Coast? This is an answer for a question for all.
Yeah, I mean, have you guys seen Wall Street come visit?
Yeah, funny enough, recently we've been reached out to by large institutions in the space. Don't know if I'm supposed to say who, but
we would like it.
They're like the big ones. And I think that's what's happening, is that they're actually seeing it as a useful tool rather than this weird, drug selling currency. And there was an evolution of the vernacular of what Bitcoin represents. Now it's a currency, or even more so like a back end to the payment structure, or settled payment structure. On our side, we're looking at it from the ground up. What we see are the earliest ideas of what people will be seeing in the next 2 to 3 years. And we see a lot of people starting to use the blockchain. We see a lot of international brokerages. I think that's going to be a key. And really what we're finding now is people are really focused on finding a use case. Before it was like, hey, we can do all this cool stuff. And then it was like, well, it's not useful to anyone. Now it's like, everyone's trying to find what the useful thing is. What is the golden gun that is going to make Bitcoin work or not? And I mean, there is no golden gun. It's like a bunch of brilliant people trying to solve the same problem, and that's sort of how I look at the space right now.
Yeah, I think this is classic disruptive innovation. The large incumbents could care less about Bitcoin when it's a $3.5 billion market cap, right? And so they dismissed it because it really wasn't threatening. It was just not interesting. And now it's gaining enough mind share and momentum from the venture capital community and from the people who are looking for innovation that they don't want to get caught, with their, just, oh, I didn't see that. I didn't want to own it. If it's going to be worth something, they want to own a piece of that, right? So now it's the mindset is blockchain technology, not Bitcoin the currency. And I think that's just an intermediate step towards ultimately understanding that Bitcoin and blockchain go hand in hand. What can they do with that? But I actually welcome even that intermediate step. I think it frustrates a lot of people in the community, like, oh, they don't get it, those idiots. But I actually welcome it. It's just, it's just a step towards them ultimately understanding that this is a positive vehicle for change. They won't be able to ultimately control it, even if they desire to, because Bitcoin is an open protocol for money, like the internet is an open protocol for communication, the banks and even the US won't be able to control Bitcoin. So it's already past that point. Having the firepower and the interest from Wall Street helping to grow Bitcoin, whether it's with global markets and institutional trading, or whether it's blockchain technology, what have you, that's really positive. That's going to help all of us. So I think for the startups in the West Coast, what would be good to think about is run faster than these big incumbents who ultimately, when they come in, they're going to be coming in through corporate development and buying up companies. And it's going to be this kind of, it's either going to be a Netscape moment of a big IPO, or it's going to be a lot of consolidation of companies that just move faster than the incumbents can move.
Thanks, Will. So actually, one of the points that you actually just brought up is pretty interesting. People always keep talking. I find that in the last 12 months, people keep dismissing the value of Bitcoin now because we trade Bitcoin. Price is very, very important for us. But it seems like now everybody's just focusing more on blockchain and technology, where we really believe that you can't have Bitcoin without a blockchain and blockchain without Bitcoin because nobody's incentivized to actually process the transaction. It'd be interesting to kind of hear if Wall Street cares about the price of Bitcoin, or do they really care about blockchain innovation? I mean, what's your thoughts?
Right, I jump in just because we did write a column.
Maybe this is East Coast, West Coast battle.
That's exactly what we're here for.
As long as getting black eyes or broken noses will be okay.
East Coast.
So I wrote a column about this. Ran out Tuesday, and it's deliberately a little provocative because there are some guys out there who are trying to design coinless blockchains, and the first response you get from the Bitcoin community is crazy. You can't have it. It's impossible. I mean, you need something to secure the network and to build value around the incentive system and everything else. The retort to that is, yeah, but what if it's a closed, centralized blockchain? What if it is a federated blockchain? What if it's something that all you're doing is authorizing, permissioning people to confirm transactions of the blockchain? And I don't know for sure what's going on, but I have got no doubt, having watched what Wall Street has done in the past, with response to threats by the technologies where there's been a decentralized or at least a external disruptive threat to what they do, has been to form consortiums to co-opt technology and keep it all in-house and make sure that that control, that centralized control of information is so important to how their value proposition works, is maintained. That you're going to get these guys interested, at least trying to form some form of blockchain that doesn't need to work on Bitcoin network, that actually has them working out. Whether it's possible, I don't know. There's this view that says it's just pointless. You just create, why don't you just create a database that does that and permission different players with it? And then there's other debates about how, well, actually blockchain allows you to do all sorts of interesting smart contract type arrangements. It's very, very technical, but I still think it's a critical question because it's more than just an ignorant statement of, oh, I like blockchain and I don't like Bitcoin. I think there is probably going to be an instinctive attempt from the street to control the process and bring it inside in some format along those lines.
No, that doesn't sound like Wall Street. No, it doesn't. That's right.
When I take away from the East Coast, really the West Coast out there is.
Well, Charlie, you created an alternate currency, so can we create alternate chains? And in a sense, can Wall Street do their own chain and just ignore Bitcoin?
Well, I mean, the value of the blockchain is the fact that it's decentralized, right? So and in order for it to be decentralized, you need the miners and you need the currency to support the mining. So that's why people think blockchain and Bitcoin go hand in hand. You can't have one without the other. So they try to create a blockchain that's not decentralized, then people are like, what's the point? Because you just have, it's less efficient than a centralized database.
That's right.
So smart contracts on a centralized blockchain doesn't make any sense because then whoever controls the blockchain controls the contracts.
Yeah.
So all of it doesn't make sense.
Yeah, I mean, the way I put it, so that's what come out. The way I put it there to retort those, well, no, you think about the challenges that happen in organizations are all about, they are all institutions and siloed divisions within a company that all respond to the same master, but have their own rules and permissions, and they create huge inefficiencies because you need people to sign off on different procedures and processes and RFQs, and it becomes, the idea is that you automate that, all of those processes that are built into big, large organizations right now, and the smart contracts allows human resources to talk to payroll, to talk to this without having to go through up and down all these verticals, and that's where the efficiencies would come. Now, whether or not you could just then create a centralized database that actually sort of somehow does the same thing, I don't know, I'm not a technician, but hearing the advocates for this talk, they seem to suggest that it's somewhere along the lines of the fact that even within centralized organizations, you have peers who don't trust each other, and that this is a way to actually institute that mechanism.
I think it can probably add some value,
Right.
but it's not going to replace that.
Right.
You know, I think part of the thing that I see happening, and again, you guys are all kind of obviously Bitcoiners, and you're a vested interest in it. You know, Mike and I, as much as we've written a book and we want to sell books, and we clearly think this is a thing, our job is to actually stand outside of it and look at it from a different angle, a different perspective. And looking at it from that angle and that perspective, I see two kind of big things going on. One is, and you alluded to it, Adam, everyone's trying to build the golden gun. Everyone's trying to find the thing that is going to be the product that takes Bitcoin to the masses and makes it easy and makes it usable, the Netscape product. Hasn't been built yet, and I think that Bitcoin is starting to run into a problem of you really saturated your sort of core market, the core users, the people who are the real enthusiasts, the real techies, libertarians, all you folks out there. And you're having a little trouble getting past that point. Now, here comes Wall Street, and you know, are they coming to embrace you, or are they coming to swallow you? And nobody can see what the future is going to bring. I mean, no one can even, you know, look, this whole thing is barely over 6 years old. It is all still being built. It is all still being written. So I don't know that Bitcoin can't be topped by some, you know, centralized system. I don't know that Wall Street can't smartly build something around it that will kind of co-opt it and usurp it, and because they already have such a monopoly in the existing system that they can just force whatever they build on top of it. I don't even know they're going to try. I mean, we don't know that they're going to try. I'm just saying that I think this is a very interesting moment for Bitcoin. You had a lot of tremendous momentum in the first couple of years, and I think that's kind of leveled off a little bit, and I don't know exactly what's going to come next.
The private blockchain idea works only within the scope of Wall Street. But then if you want to provide financial services and on a global scale, you need a global currency to clear, right? And so if you want to extend into microfinance and into things that traditional Wall Street services have not been able to do because of the cost of operations, the cost of all the people, and inefficiencies, and lack of trust, that's when you need the smart contracts and a currency, Bitcoin, to actually clear. So this idea is only a stepping stone. It'll work to settle trades as they go to DTCC on crypto securities and crypto assets, but going beyond that, it's going to come back to Bitcoin.
Yeah, so I'm generally in agreement with the West Coast on this one. I'd say out here we're making one major, we're making an assumption. I mean, it's a calculated assumption, but it is an assumption. It's that Bitcoin is the one. Like, we're saying that the network effects cannot be parallel. They cannot be duplicated because there's so much venture capital money, there's so much brain power, there's so much momentum moving in favor of Bitcoin versus something else, like starting a new altcoin at this point. No offense, Charlie. It's just difficult to surpass what Bitcoin has created. So I mean that's sort of my stance. My stance is it's Bitcoin. It is, digital currency is a thing, and it is Bitcoin, and it's Bitcoin's blockchain. That is going to happen. And right now it is, I mean, there's definitely this lull, maybe is the word. Like, and what I'm, by the way, I'm calling it the Bitcoin tsunami. So people start saying that. It's because it's because 90% of the wave of a tsunami is built up underneath the water before it hits land. And so that's sort of what's happening right now. We have hundreds and hundreds of Bitcoin companies who are all the smartest people I know working to solve real problems that people in the world are having. And that's going to hit land at some point, and it's going to be really, really exciting when it does. But right now, there is no mass adopted thing. There's nothing that's really happened yet, other than speculation. Speculation is the big thing. So just keep speculating. I made some money with that.
Yeah, actually, let's talk about speculation a little bit, because that's the area that's what we kind of focus on. So, and it actually seems like the United States is the biggest area for investment of actual Bitcoin companies, whereas China, on the other hand, is the exact opposite. They don't really invest in any companies, but they're leading in speculation. So I'd just kind of like to get your views on that, like, you know, even with Wall Street. Is Wall Street interested in the speculation more?
Well, they're building services that will facilitate it, right? I mean, that is the point with NYSE's engagement, that's the point of NASDAQ and the market, that's the point behind it and coins that are rolling. I mean, there's a lot happening, and of course, you know, Terra Exchange and the derivative side of you guys and sort of stuff you're doing to build out, you know, these services for.
Well, yeah, and I mean, I've only heard this anecdotally, but I mean, you can imagine it too. Traders love things that are volatile, that they can trade, that they can arbitrage, that they can make money off of. So
yes, we do.
Yeah, right. So you know, to a certain fact set of Wall Streeters, this thing looks beautiful. This is great. You know, like, oh my God, it goes up, it goes down. I can play it. I can have fun. You know, like they live for this kind of stuff. So as much as Wall Street's sort of institutional reaction has been, this thing is, we're not gonna, this is a scam. The traders love the idea.
Look at the guys who are getting in, potentially market makers. We wrote a story about this just recently. Citadel, Knight, the Gecko company. So Knight, Gecko, these other guys, these sort of key high-frequency trading folks have become the base market makers of the financial system. I mean, these guys are absolutely critical to that. And they're interested in it. I think that they're just toying and fiddling around with it right now, but I think it's because of this thing. This is an ideal product for them. They are going to be the ones that sort of remove that arbitrage between the volatility, but that right now they want to be the guys who drive that. And it's programmable, which gives them a nice sweet spot as well for what they do. So there's certainly a lot of interest in it. The point about China that's interesting as well, this is, I think, really important. Watching some of the wild swings of the past couple of months gave us the impression that there was way too much innovation in the sort of service product side of things for speculators in places like China, and not nearly enough build out of infrastructure and protection. So you had the arrival of powerful tools like margin trading, short-term futures, and no things like you didn't have stop loss orders, you didn't have circuit breakers,
trading law,
and you certainly didn't have regulated markets and all of that sort of stuff. So you had these ridiculous capacity to arbitrage across the bitstamps versus the Bitfinex and so forth, and it was just a disaster. These whales could come in and toy with everybody. And I think it was really bad for the impression of Bitcoin as being this kind of Wild West kind of haven. So the hope would be that this is the moment. You've got to have serious, robust, low latency regulated market, because otherwise people are just going to make up these things and throw it around. And that's what hopefully is going to come with the arrival of this new institutional trading.
Well, that's what we're trying to build, Coinbase.
Right.
So,
Yeah, exactly. You guys are part of that as well.
Yeah. So like 2 years ago, the leading trading exchanges, not GOS, right? You guys all know how that happened. So over time, companies like Coinbase will start building out these robust, really low latency, regulated trading markets for high frequency traders, and just to have something that's secure and that everyone can use. So I think it just takes some time before the Bitcoin trading matures, enough for all these high frequency traders to come in for Wall Street to jump in.
It's funny, on Wall Street, they're always talking about the free market, the free market, the free market. but you don't really think about all the rules they put on top of it to make it a secure market. And then Bitcoin comes along with literally no rules, and it is this, just crazy, hyperkinetic, wild show, and everybody on Wall Street sneers at it. Oh my God, that thing is terrible, it's volatile, look at it, it's awful. But that was the freest market you could ever hope to see. And you kind of realize in that sort of contrast, and I'll say, you realize that there is a value in having some rules around this stuff. There is a value in having some kind of stability, because you do want this to be things that people are going to put their trust in, people are going to put their time in. So that's going to start being built out. I don't think the Bitcoin exchanges and coin exchanges in general are ever going to do exactly what the capital markets do now. I don't think that would be right, but it can't be quite what it was, a year or 2 years ago.
Well, Harry, being the one person on the panel that actually trades every day, please do tell us what the trading environment is like with Bitcoin. You always say it's the dream thing to trade.
Yeah, so actually, really what Paul says, it's great for traders because, actually when you have somebody that manipulates the market and creates a $4 spread, that's a great trading opportunity. I mean, at one point, we had $300 spreads. So if you're a trader, that's like, $300 spread in 5 minutes is something, we could all just dream of. And I actually, as a trader, I think regulation only applies to the United States because we conduct a lot of our trades overseas as well. I think Bitcoin's probably going to be one of those things that's going to be extremely difficult to regulate. I mean, it'll be regulated in the United States, but if I don't trade in the United States, there wasn't going to be fine, and I'm Canadian too. So.
But does the market though, end up being sort of, if much of the liquidity ends up being here, right? This is where it's
I don't actually think most of the liquidity is going to end up being in the United States. I think, and this is just my opinion, just because I've kind of seen a lot of it too is if you look at the retail investor in the United States, traditionally they'll go through a bank or they'll go through like a wealth manager or somebody else, a broker. In China, the retail investor is very, very savvy. These guys will actually, like the mom and pop that owns the restaurant, they will actually go and set up their own brokerage accounts and trade on the exchanges themselves because they don't want to pay commission fees or anything else. So it's a very, very different mentality. You've got over 1.5 billion people in China. So just even take 1% of the market and assume that they actually just trade on their own account. That's almost like 7 million people, right? So,
but what about institutions? So you think it's always going to be a large retail market? I mean, what happens with all these big institutional use cases that we're talking about, and you end up with the street having to sort of build a settlement system on and everything else?
I think right now Bitcoin, because its inherent nature is that it is decentralized, everybody's trying to say that, oh, we're going to build the exchange. So for example, a few years ago, everybody kept telling me, Harry, arbitrage is going to disappear because it's going to be centralized. Well, actually, there's more arbitrage now because there's more exchanges, there's more decentralization, and there's more currency trading pairs. There's arbitrage between euro, renminbi, USD. There's actually more opportunities. I mean, they're smaller. You don't see like $30, $40 spreads, but I would actually tell people that because there's more exchanges and more people, like you can't possibly trade on our home service. I mean, we trade on a lot of different exchanges. So,
be interested to sort of map this in comparison and develop with the foreign exchange market.
Yes,
I was close to Bretton Woods because it must have gone through the same phase of like creating opportunities to trade, but eventually you reach a point where it's out there.
Yes, and I think the regulation in the United States will probably lead the way, but I think that's going to be quite a few years out.
Yeah, well, that was a long process.
Yeah.
Well, let's talk about regulation and talk about bit license, which is a charge coming from New York, which Adam just recently famously said we actually need revision to that even further. So maybe you guys can start debating on whether or not the impacts are going to be what would be an ideal bit license.
In my opinion, the first shot, I don't know if anyone actually read the bit license or the second draft of the bit license, but the first draft was like people going around a room this big with this many people and saying, what rules do you want? What rule do you want? And literally getting everyone to pile on. There were redundant rules, there were duplicate rules, there was like, I don't know, it was like fingerprinting everyone, and like it was their attempt at shooting for the sun and hoping that they could settle around the moon. And then the second revision is way better. Oh man, it's clean. It's pretty simple, but still it is overregulated. They're asking New York. It's sort of an interesting thing where New York feels they're better than the federal government. I feel like
that's because they're not elected.
and it's one of these things where they're like, hey, well, the federal government's asking for this, well, so we're going to ask for double that. And it's like that ends up being, especially, so I'm looking at this from a bunch of startups' perspectives, and it becomes way too expensive for this type of innovation to happen at the level that I'm at. So it impacts really me the most and our companies, because if the barrier to entry is too high, no one's going to do it. I mean, now, you know, we've overregulated financial markets so much that it costs $25 million to start a bank, it costs $3 million to start a brokerage, and like, no one can actually, there's no innovation that happens on that level. That's why Bitcoin was so cool, was because suddenly there were all the smartest people in the world working on financial products. Like, that never has fintech been so sexy. And if
That's a bull quote.
Yeah.
That's a bull quote.
And if they continue in this direction, it's just going to cost us. So I mean, I estimated my first company, I started a brokerage, and it cost us about $1.5 million to get to the finish line. But it also cost, you know, we had to hire a compliance officer that cost like $250,000 a year. You have to hire you know, there are like 7 other people you have to hire for the compliance department because there's never enough compliance. And then lawyers cost double what the compliance costs. So my estimates were it was going to cost about $2 million to get to the finish line and about $1 million a year of extra to continue to do that. So, you know, there's just going to be less innovation if that is how it works. So I mean, what I was asking for was something more reasonable, moving it more into like brokerage level regulation, so that we don't duplicate state level stuff, and I mean federal stuff for the state. The state just takes whatever you did for the federal information collection and regulation. And then also, I was thinking that it'd be really cool to have like a test environments for people like to experiment, like have people try to start companies and experiment on 200 people who know that they're being experimented on. And allow for that to happen, because regulation is all about protecting the customer. If the customer knows that it's, you know, they might lose their money, there might be something like that. I actually think it's really, well, it was my idea, so I think it's brilliant. But like that, I feel like the reason fintech's never been sexy is because, like, you know, the 18-year-old who has a computer can't start they can never fathom what it would take to start a financial technology company. Okay, I talked enough. We can continue something.
Yeah, so unfortunately, you know, so at BitGo, we raised about $14 million. Naturally, every, you know, cause came around to us with the hat open saying, please, you know, help us found this and done that. So we put a lot of money into good groups like Coin Center or Junior Digital Commerce. So have a lot of experience in understanding how they're thinking about the lobbying efforts and also just, you know, understanding the problem. And there is really a gap between the New York Department of Financial Services and what we're all trying to do. It's compounded. There's a problem because Bitcoin has a massive PR problem, right? We have the Mt. Goxes, we have, you know, the Charlie Shrams and the Silk Roads and all these things. And so the regulators naturally are saying, these kids can't take care of themselves. But on the other hand, I think there are a lot of really earnest entrepreneurs out there, companies trying to build the right protections. And you have this dynamic of the Bitcoin blockchain has new models that doesn't apply to our existing regulation framework. So let's take multi-sig, for example, this, you know, big thing that BitGo worked on, other companies are embracing. So let's say you have a 3-key wallet, and it requires two keys for any transaction, and you give 1 key to each of 3 parties. So who's the custodian of that balance? There is no custodian, right? It takes 2 different parties, 2 different organizations, 2 different people to come together and agree to transact. And what the regulators want to say is, who is the custodian? Please fill your name in here. Who's the custodian of this fund? Who's the custodian of the funds held by an exchange? We're going to go regulate that custodian. And so when there are new models being created, the regulators don't really know what to do, so they do pass the hat and they say, okay, everybody, what's your idea? So we're going to... Anybody who secures, stores, touches, looks at Bitcoin, anything else, right? And that's where it becomes way too overbearing. The chilling effect is that if they do this version as is, or any similar version, is it's going to prevent the real protections from coming out. So you might have a company like Vigna or Coinbase or others that do hold multiple keys, in the multi-sig wallet for the benefit of the customer, so the end customer isn't holding one key and then losing it, or holding two keys and losing it, right? And so that might be a benefit, but maybe you have a startup coming out of Boost who wants to do that same model, and they have good ideas on top of that, but they can't do it because of the cost of regulations. They don't. So then the world doesn't get that innovation. So at the end of the day, if this type of rule goes through, you're going to have a few dozen companies that can operate under those costs. You're going to lose the thousands of companies that could innovate.
Yeah, I think the other really interesting thing, and you alluded to this, is every single regulator on the planet, no matter where they are, has a line on a map that delineates how far their power goes. And Bitcoin, to an extent that I don't think we've ever seen, certainly not in financial services, gives you a global reach, allows you to get at people anywhere on the planet. And regulators are always playing catch up with new technologies, and this one I think is just simplifies that whole process. At some point you're going to have some, if you're going to have effective regulation, you're going to have some kind of globally coordinated framework that everyone can agree upon. And whoever comes up with it, whether it's the industry themselves, they come up with standards, or a couple of regulators can get together, it's going to be a very interesting process. But it is going to take a very long time to play out. I think what we're going to see out of Lawsky and out of New York is literally the first step, and it's going to be a very, very long process. And what will be interesting to see is how draconian it is, how many people it brings to New York, and how many people it sends away from New York, and where else they go to do their business. It's going to end up being a very good test case. And it's easy for me to say because I don't have any money in it, and I'm just watching it from afar, and I get to write about it, good or bad. It's different for you. But it's going to be a very interesting thing to watch to see how this plays out.
I think my worry is that the regulators of the world are just going to copy-paste what New York did. Like, state by state, they'll be like, well, New York did it, it got back there.
And they're looking at it.
Yeah.
And people are talking about it as a
London's approach. This is, I think, the interesting game here, because one place in the world that thinks that it can out New York, and London, right? And in fact, on one level, it wins. New York thinks it's the world's financial center because it probably does more money transfer through Wall Street than anywhere else. But in terms of how the world's bond fundraising is done, where countries and companies of the world raise money, it's London. London is absolutely critical to the euro, which is ironic, of course, because you have the euro. But without London, you don't really have all of the trading in the euro. So London is really, really important, and it has this great historical plan, and they see themselves as being, having that kind of rightful role. The one thing that the UK could hang on to with the death of empire was this critical role in finance. And so now, with Osborne coming out with his statement about, on one hand, I think a regulatory framework that was a little vague, it might have sort of a bit license-like feel to it. But the cool thing, of course, is it's nationwide. It's not a state-by-state problem, which is a real burden in the US. But also this really proactive kind of message they're sending by investing £10 million in blockchain research. That was mind-blowing. But I had no sense that there would be a government as important as the UK is saying, you know what, we need to do this. And the logic is, we want London to be the leader in financial services. And the way you're going to be the leader in financial services is the leader in fintech. And if you're going to be a leader in fintech, you have to figure out what this blockchain Bitcoin stuff is. That's really interesting, because then you get a competition. And this idea of Paul's talking about, how does it all wash out? It may well be a New York versus London competition. Do the draconians in those places end up winning that race, or do the innovators, right?
It's really funny you say that. I've had multiple startups pitch me fintech companies saying we're moving to London to be able to launch it. And it's because they're in so it costs $25 million to start a bank in the United States. So we're completely trying to centralize it. Like that $25 million doesn't matter to JP Morgan Chase. It matters to someone who wants to actually start a bank. But in London it costs 10. So it's like a $1,000 plane ticket, and you can launch a bank for half the price. So it's really, I'm bullish on London just because all these startups are starting to migrate.
What's Virgin Money? Right? So the new bank that Richard Branson is starting up, which was built from the old licenses of Northern Rock, the classic first collapse case of the financial crisis. He took those licenses, building Virgin Money. It's a total fintech.
That guy's so cool.
Well, can you elaborate more on Virgin Money?
I don't know enough about it, but there was a CEO just wrote this blog the other day about what would a bank of the future look like. And the thing that they're focusing on is the mobility of the bank account. Right? So it's the way that you think about telephone number and what helped to blow out and liberate an explosion of innovation and development around telephones. One of the issues was making the phone number mobile. And they said, like, what about if we made bank account numbers mobile and it becomes attached to the person? All of a sudden, the whole dynamic changes in terms of what your relationship with the financial system is and what the bank's role as a service provider is. And I think what they're doing is they're looking at themselves as a service provider in terms of transactions rather than this sort of centralizing process of fractional reserve banking. It's a very different mindset, and I don't. It's not necessarily built around Bitcoin and blockchain, but that Branson's interested in that sort of stuff. And I just think that's going to be a much more receptive financial institution to this sort of information than anything in the old sort of money center banks that we used to deal with.
Edgar Allan versus Jekyll.
There you go.
It's going to use that. Sorry.
He actually has a column. But, well, that's another question. A lot of people say, maybe it's a branding problem for Bitcoin. Do you rebrand Bitcoin? Do you make it a bit versus a bunch of different little bits? I mean, what about the branding issue of Bitcoin? Calling it crypto or whatever. Do you guys have any feedback on that on Wall Street and West Coast?
I mean, I think that vernacular-wise, like I've used that word twice. It's a good word. It makes me sound so much smarter. Jargon. Let's go with more synonyms. It's already evolved. Someone felt, I just talked to someone yesterday where he runs a Bitcoin mining center, like a bunch of mining racks 2 hours away from here. And he came to me and he called it a blockchain data center because he didn't want to use the word Bitcoin. Like he's saying, like, I run a blockchain data center. And I mean, technically it's not incorrect. Like what mining allows for is the ability to clear transactions in the blockchain. And I found that very interesting, where a lot of people in venture are starting to say, like, I'm not interested in Bitcoin, but I am interested in the blockchain. And it's like, it's the same friggin' thing. It's a word difference, and I guess you're referring to the ledger instead of the currency, but I actually do believe that they need to exist together. So, I don't know.
When we were trying to come up with the title of the book, we played around with dozens of variations. We couldn't come up with the exact words to use. Should Bitcoin be in the title? Should it be in the subtitle? Should it not be in there at all? And we went back and we ended up with...
Well, why didn't you settle on Adam Draper's biography?
Don't talk about the follow-up book yet, Adam. That's the follow-up book. But it was funny because we did eventually settle on The Age of Cryptocurrency, which I like as a title. I thought it was really good. And I remember right after we had decided on that, somebody wrote something on CoinDesk saying, the language around Bitcoin stinks, these things have to change, cryptocurrency is a terrible word. And I was like, we just settled on it, give us a break, we finally agreed on it. The language does matter, but I personally think the word Bitcoin is good, and I think despite all the things that happen, the Goxes, the Silk Roads, all those things, I don't think it would be wise to change these words. And I mean, cryptocurrency describes what it is. It is a currency that has crypto.
For the title of the book, it's the best thing ever, because that's sort of what everyone was calling it in the beginning. But I think the evolution of the word just naturally happens. Like, we don't call the internet TCP/IP anymore. Like, I think that's where we're going. We're going away from TCP/IP. We're calling it the internet, or the net, or the internets. I don't know, the web. And I think that's sort of more the evolution of what the words are meaning.
I actually do think that the words actually really do matter, and I do think that
you're a writer, right?
Well, I am a writer.
So words do matter.
Yeah, I understand it for words. If words Coast and the East Coast. So I'm actually, Paul and I don't know what's good or everything, but this is what I'm going to choose to slightly disagree in the sense that I think that it's time for a branding change. I think branding changes are integral to the way concepts and for companies that really deal with these challenges. And I do think that this is the reason why. I think that as I've tried to explain Bitcoin to folks, and the first thing I want to do is talk about how it's not backed by anything, and it's really volatile, and it's anonymous, and how can it possibly ever replace a dollar, and I can't see it like I can my dollar, and then you're like, oh God, I've got to explain what they don't even know what a dollar is, right? So that's just like really problematic, and I think that what you end up doing is having to convince people that you just got to understand that this is the means through which we process value transfers, and whether you need a coin or not, and I totally, I get it, you guys, it's really important there's a coin connected to it, so it's there, that's critical, but if you can get society to get away from whether the coin itself matters. In fact, it'd be great if we didn't talk about dollars in the same light, we just actually talked about somehow our means of transacting. And that's what it was. And so I think this, this move towards blockchain solutions, the idea that you can separate the coin from it may be crazy, but the fact that that becomes the dialogue, it will free up a lot of this kind of these barriers to people's concept of grasp. And we do it all the time. Just trying to get a story in the paper about a Bitcoin 2.0 idea. And they're like, yeah, but hang on, it's a currency, isn't it? They're like, yeah, but it's also a ledger, and you can do stuff with it. And they're like, what the hell are you talking about? I feel like we've trapped the narrative around a thing that is just one element of this product, and that if we could rebrand around the broader concept, then it actually could be quite constructive.
So I'm going to make a case for crypto as the brand. And we use cryptocurrency security standard when we launched that security standard in January. And there's two reasons. One is that it's extensible. So we're just talking about cryptocurrency, specifically Bitcoin today, but think about crypto assets, crypto securities, crypto commodities, crypto titles, etc. And so it's a broader category name. And the second reason is a little more philosophical, which is if you think about what backs the value of any currency, so let's take gold, right? It's the scarcity and it's the properties of the currency that it has. You take the dollar and it is the faith in the federal government or lack thereof, and the systems regulation around trading and moving the dollar around. So what actually backs the value of Bitcoin? It is the strength of the cryptography. Why are there 21 million Bitcoins? Because that's cryptographically sealed within the overall system. Every transaction is cryptographically signed. After 6 blocks, you can't go reverse the chain. And so crypto is actually, when people say, oh, Bitcoin's backed for nothing, it's fake. I say, actually, it's backed by cryptography. And that is stronger than the faith in a federal government, depending on your government, and so on and so forth. So I like crypto as a brand.
Well, so let's leave the US for a bit and talk about what we think about Bitcoin or the blockchain in the rest of the world. Let's talk about impact there. Does the US even matter? And should it? What does it matter?
So I actually think that the US did. It mattered for a reason, which was speculation. It actually brought light to it. It was a marketing. It was like, we love being early adopters, we love speculating on stuff. So, but as far as Bitcoin, as a use case goes, it's not all that useful because we're 97% of our wealth is in digital bank accounts. But there are places in the world that there's 10% bank account adoption, but 90% cell phone adoption, like Africa. There are a couple African countries with those demographics, and that's the perfect place for Bitcoin to thrive. And then places where there are huge capital controls, where Argentina is experiencing 25% inflation year over year. That's what everyone always talks about as the perfect place for Bitcoin. However, governments are pretty strong. You are sort of battling the government at some point. There's a black market for US dollars in Argentina. They actually understand the pain point that Bitcoin solves for them, which is
the Bitpower solution to that is fascinating. I mean, it's the exact opposite of what they want to use.
I've plugged any of the companies during this panel. I was like, I need to start plugging my companies. You did it first. Thank you.
I know those guys, and I lived in Argentina for 6 years, so I know the dynamic that he's dealing with. And just to get your head around Spencer, we think about what happens here, where you BitPay or Coinbase is typically going to take the Bitcoin from the customer and process it, give it to the merchant, who then immediately transfer it into dollars and give those dollars to the merchant. The exact opposite is what's happening with Bitpower. And the reason why is because tourists going to hotels in Buenos Aires are oblivious to what's happening, but they're swiping their credit card, they're getting charged dollars, and Bitpower is converting those dollars into pesos. Why that matters, because there's a black market rate in dollars and there's a official rate in dollars. If they had to go through the banking system with a credit card swipe an American tourist, they'd have to transfer them back into pesos at this confiscatory rate. When they really want to get the real rate, which of course all black markets are the real rate, they can now take their Bitcoin, go out and do a local Bitcoin exchange with somebody, and they've got a much better, they haven't got quite the black market rate, there's going to be some arbitrage in that, but it's far better than anything they could get with these tourists. And so it's a really smart idea, and it's, I don't know, there doesn't seem to be cracked down. We've talked to some of the merchants and they don't really want to draw attention to themselves, but it's such a cool way to think about the problems that people face in these different places. And typically countries like Argentina, where there's a consistent and repeated breakdown of trust in the monetary system, and the sort of hoops that governments have to leap through to try to deal with those problems, and the problems that causes for them.
Actually, Bitpower saw a really interesting use case that started happening really right after they launched. So Argentinians don't actually want to bet completely on Bitcoin. They're like, well, it's volatile, I don't know. But they know for a fact that their peso will go down at 25% annually. And so they want to bet with the US dollar. And what you can do is you can take the Bitcoin, sell it in Bitstamp in Slovenia. Is that where it is? Did I say that right?
Actually, UK. I think it's
UK? Oh, really?
Yes.
Slovenia is
okay. See, everyone's moving to the UK, everyone's moving to London. And then they cash out, but they don't actually link a bank account, they just cash out in US dollars. So they can hold the value, and then when they want it, they bring it back they sell it, they buy back into Bitcoin, and they send it across.
Thanks for that plug on Bitcoin, was so looking to that.
Yeah. That was the rest of the sorry. That was it.
I just think to your point, I think the U.S. matters because we have a lot of capital that can be invested, and we have a lot of smart people here that can work on these products. So the U.S. matters. I mean, it clearly matters. But when you talk about where Bitcoin is going to do the most good, it's probably, if it does take off, which I think it will do the most good overseas. It will do the most good in emerging markets. It will do the most good where it suddenly offers an extremely cheap way for people to get onto the financial system, to get onto the rails, where they just never had an opportunity before. So, it's really exciting when I think about this as something that can do some real good for just hundreds of millions and billions of people overseas. That's, to me, where this becomes an extremely exciting story. And I think that is where the biggest part of it is going to be written. But, I'm born and bred in the USA. I'm never going to say the US doesn't matter.
So I think as an angel investor, from an investor perspective, I don't believe that one US company can solve all the problems that can be solved with Bitcoin. And really what I've already seen, whether it's companies coming out of Boost or other places, is there's really interesting local use cases. And it's, first of all, knowing the culture, knowing kind of the local, how people think in that culture, and say, okay, I'm going to use Bitcoin to solve this problem, and then having some kind of unfair advantage. Maybe it's a relationship with a local bank, maybe it's some kind of distribution tap in. So, while the US likes to think, or Silicon Valley likes to think that, hey, we can go out there and we can take this massive global market, it's fragmented, and we'll just, it's a $100 million market, we'll collapse it to a $1 billion market and own it all and control it all. and Wall Street likes to think that as well. I think Bitcoin is going to lead out to a lot of regional, local use cases with local entrepreneurs solving local problems, and that's really exciting.
Yeah, I'd actually agree with Will on that. Bitcoin is almost kind of like the internet in a way that you can't, it's not like a category killer. Like, you know, for example, transportation, Ubers and Lyft, these are like the category killers. I don't think you're going to have that with Bitcoin because the world's fintech's a very, very big place. So I agree with Will.
So yeah, it can take a whole series of use cases that are all specific to local needs, and that's a really interesting way to think about how it evolves. And I just think that just generally, there's whether these changes happen on a case-by-case basis or either way, the potential is huge, right? 2.5 billion might be downgraded that number, but nonetheless, it's a very large number of people who don't have access to bank accounts, adults who don't have access to bank accounts, and all the other attached problems that come with being in the informal economy can be attacked with this technology. But one of the things I think is really important for you guys who are building these really cool products to remember is that it's one thing to sort of create something that seems so obviously easy to use and have such a great price point compared to, say, Western Union and everything else. It says that's it, they're just going to come, build it and they will come. Because you've got to get it marketed to people who have a very specific understanding of money, a very important relationship with money. The poor have a relationship with money that is different from the relationship we have. And it is one that I think it creates a huge opportunity, because if you can tap into the fears they have about the existing system, the concerns they have, but also try to figure out what they are, and at the same time, you know, convince them that this is somehow a different way to think about it, then you have a way to bring it forward. But just making it cheaper and faster and better, as much as that seems like a no-brainer, why won't you pay 10% to Western Union when you can transfer for 1%? There's a lot going on in terms of people's relationships and the way that they build culture of money. And so, poor immigrants, it's just something to think about.
Look at the problem first and then find a solution, right? That's what I learned at Boost. So, plugging that a bit.
Boost.
We were in Triport. So, I guess the next question is, where do you guys see Bitcoin maturing? Where would you like to see it, and what's in store for Bitcoin? I mean, yes, it's a lull now, but is that going to last?
I think the first thing we're going to see is probably maturing over the second year is markets to kind of hedge out, at least from the price point, to really kind of help stabilize some of the pricing. So, I mean, we're pretty much bullish Bitcoin longer term, but right now there's going to be a lot of volatility because of merchants and payment processors, miners can't be hedged. So we think the next big opportunity for Bitcoin is going to be kind of in the derivatives market.
Internet of Things.
I think, Harry, I think the derivatives market will really help. So, like, a lot of people think speculation is bad, but speculation is actually good. It helps find the right price. The volatility is bad for a lot of reasons.
Just speak closer to.
Can you hear me? Yeah, so volatility is bad because people don't like to hold Bitcoin, so they need to cash out for $1. Because the reason why they can't hold Bitcoin is because it can all of a sudden lose half your earnings if you're a merchant. So I think the derivatives market will help stabilize the currency. And I still think the currency is way in the price, so it will go up. It will go through booms and busts, but hopefully it will be more controlled. And I think the derivatives market will help.
Yeah, I mean, I think speculation was sort of an early exciting concept, and I think it will continue to be. I think it's what will drive liquidity in most of the market, which is important for Bitcoin as a currency. I actually think that some of the next, I believe IoT is going to be a thing. Eventually, like how machines communicate with one another and pay each other, and
Contract with each other.
Drones paying like for energy or something. But I think the next actual big companies will be the ones that support other Bitcoin companies. So the ones that make it easier to, like BlockCipher, or there are a bunch more in that API space where they make it easy to plug, play, build a Bitcoin company. And I mean, the reason is that ends up being a quality infrastructure layer for the future of Bitcoin. That needs to work better than it currently does. So I actually think that the next stage, that will be the next like big success in the space?
I kind of think, I think the build out of the marketplace is going to be important. Certainly how Wall Street continues to evolve and adapt their mindset. You know, the building of the exchanges, the derivatives markets, all those things, sort of watching this go from a very rudimentary market, a Mt. Gox thing, where all you could really do was buy or sell it, to a more mature marketplace where people can come in and trade it on a number of different levels and different things. That's going to really be a big story. And I think that's going to happen relatively soon. You know, that's going to be one of the most direct things. Bigger things like the unbanked are going to take much longer time to play out.
I hope that we'll see the first killer app for Bitcoin. You know, the email to the internet concept. I don't know what it is otherwise. Maybe I do. No, but I hope that's what we'll see. I mean, that's really what would propel all of us forward, is more consumer adoption. And whether it's Bitcoin or it's, you know, Visa using Bitcoin in the back end, and also Bitcoin is being used by some kind of financial services in some sense. I think more realistically what was the next step is actually some amount of consolidation at the high end of the market to create some category killers. So imagine a major exchange and a major mining company getting together. And what would that look like? So I think there will be some interesting dynamics in the ecosystem instead of this kind of CoinDesk map of our companies in all over the place, to start to see some real major players that are asserting control, and then really leveraging that control to do interesting things on the blockchain, like the extension into the Bitcoin 2.0 concepts, annotations around color coins and things like that. We'll see.
It's funny, no one said remittance, but that's sort of like what most people are saying is going to be the first use case. And yeah, it's I mean, I believe that it will be one of the next big use cases. Oh, I guess you referred to it. Sorry.
No, I didn't just agree.
Yeah. Yeah, the cross-border payments in some way will be a big deal, because what Bitcoin does is it brings the world together on a payment structure, same way the internet did with communication. That's a very exciting thing.
So do we, I guess final question would be how everybody sees Silicon Valley and Wall Street kind of working better together, and maybe getting more understanding between, just bridging the gap. Like, is fintech seen as sexy on actual Wall Street, or is it being seen as not? What's it like at the Wall Street Journal, for instance?
Yeah.
Cover Bitcoin.
Journal, still coming to terms with it very much. You know, I think the beauty we have is it's an organisation that's got lots of different vehicles and outlets to write in. So Paul and I have access to the Money Bit blog, which we have a much freer rein. So we're able to explore this and to get into topics that we wouldn't be writing in the mail, which is great. And that's the way in which this has evolved. The institution itself, if you include the paper, I think is still, you know, really coming to terms with it. It's still an interest. It's kind of a novelty rather than something to be grasped as the future, although that's starting to evolve. Wall Street, I think, is actually ahead of us in that sense. I mean, I think that just the level of interest to play. I think that if you ask them, does fintech matter? Absolutely. I mean, that word is ingrained now as something that we worry about. And in that sense, it is something of emerging, or at least a tentative embrace or a welcoming of the role that Silicon Valley can play in shaping financial services. They want to take control of that process and define the terms, and make sure they don't lose money and make money out of it, and everything else we talked about. But it's definitely a moment in which technology and finance are coming together, and very different models are starting to emerge. It's actually very exciting.
I mean, I think that Wall Street and Silicon Valley rarely agree on things, and it's sort of, you always hear like conflicting opinions from like Wall Street and Silicon Valley, and I think what it does is it drives competition, which drives innovation. So like I think it's a welcomed thing. It's like that everyone has their own thesis on what's going to be the killer app of Bitcoin. I welcome someone to try on both coasts, and I think that the advice will be different on each coast, but it'll be it's only good, only ends up being good for the overarching ecosystem. So, yeah.
I want to open up to Q&A. I think everybody has a bunch of questions maybe. So I guess you first.
Can I go feed my meter? I'm not kidding, I'm only for 2 minutes, I gotta go feed the meter. That's what we're going to do. My answer for me.
With microtransactions.
Can we do that?
Exactly. Why can't we just send it to that?
So yeah, I had a question about the MIT coming out and sticking their nose into the governance of Bitcoin crypto. But on top of that, is there something we can learn out of the kind of haphazard way the internet ended up being governed and the ways that those boards came together?
Yes. So the MIT, so the Bitcoin has a PR issue. Bitcoin Foundation itself has a PR issue, and you know, there's been, it depends whether you read Reddit or you actually talk to the people who are at the Bitcoin Foundation. The reality is they're trying to maintain a good brand for the ecosystem and figure out how to evolve the governance. On the other hand, it's in a bad place, and so I think Joey Ito and the group that's getting together at MIT are recognizing that the core need, as is Gavin Andreessen and Patrick, who's supporting him, the really important thing here is that we're at Bitcoin core dev version 0.1 or something, right? I mean, the version of the code in any corporation would need to be released to like private beta at this point, right? And we're running the entire ecosystem on it. And you've got a handful of core committers and a few, you know, maybe a dozen core developers. So, and all of them are underpaid or not paid, right? So there is really a need for an institution like MIT and other corporate companies in the ecosystem to support the core development. And so I think that move by MIT and supporting that is actually really positive. I don't know, I can't sit here and tell you the full history of kind of the internet, but there are people who are working in the ecosystem like Sean Neville, the CTO of Circle, or you know, other folks who've been around the block a few times and do understand that. And I think there are things we can take away, some good, some bad, from the development of the internet, the IETF and other things. It's not an exact model we want to copy. And also, you know, the internet was developed with very much kind of a initially US-centric approach, and we want to, you know, Bitcoin has moved well beyond the US as we've been discussing. So we need to think about that globally. But I think I'm personally really excited that MIT is stepping in to help, and I think we'll end up in a good spot.
Yeah, it's really interesting that the Bitcoin core, well, I mean, it's like drama, you know, like, it's built,
FE Garzik's tweet?
No, I
said, if Bitcoin, then drama.
Yeah, and it's sort of like, you know, it's working so everyone cares a lot, but at the end, it's not like, the problems aren't technical problems anymore at the dev level. It's mostly bureaucratic, like they're arguing about what they should be doing, and that is the most fascinating part of the fact that like this technology revolution is really centralized down to these core developers who are debating about like what the right direction is. Peter Todd versus Gavin Andreessen, it's a really interesting problem. I don't know. I've just been sort of fascinated that like this thing that we're all building on top of is sort of a house of cards. Kidding. No laughing, huh? Kidding. It's not.
I think it's hard for me not to imagine that a move by MIT to do this is not a fundamentally good thing. I mean, it's if you think about the problems of Bitcoin Foundation space, it was all well intended to try to create a forum that would have the community and industry join hands and formulate a mechanism for funding development, but also all the other things that they felt was needed to help promote and sustain and support Bitcoin. It didn't work because you had 50-50 voting in terms of board membership, but 85% of the money was going from industry. And industry was always feeling as if they were hostage to the fact that the individuals are going to want something else. And the individuals, let's face it, are passionate, rather sometimes impulsive group who've got very strong views. There's nothing wrong with those views necessarily, but they're inherently going to sometimes clash with what industry figure is needed, at least in terms of the stability of the development. So there was a reluctance to put money into the system and fund the way the pay for gatherings work and everything else. It was just a broken system, and it's probably not a bad thing that the foundation ends up being run by individuals and nothing else. And this is serious development work and the development of standards and all this stuff that needs to happen to resolve some of these bureaucratic challenges lands in a neutral place like MIT. It looks like a nice bit to me.
Well, we had actually a more recent model was the lobbying and political efforts, right? So there were a variety of different trade groups that came together. The Bitcoin Foundation tried its own lobbying. All those efforts were pretty unsuccessful. Then you had Jerry Brito, backed by Andreessen Horowitz, gathered money from the top companies in the space, put together a budget that would last years, brought in a good lobbying group, and so on. So they created an organization with experience dedicated to that effort, and then Marianne Boring and her organization after that, same model. So that's really good. We're going to see, I hope, the emergence of an organization around core development, and then the pieces that are left behind, we'll see what the relevance and importance of those are. Bruce Fenton's now at the helm. I think he's a great guy. I think he'll be able to do something progressive and and good for the future.
Adam, I just came up with a great idea for an app. I have an idea for a big, can I apply?
Apply. It opens August 7th, or application.
Is there a better way to put meters? Can I apply? I'm going to quit the journal and come here.
I think it's a great, use of microtransactions.
Yes, right. It actually is a good idea.
Yeah, we think BlockCipher and Zapchain did some microtransactions for not bug bounties, but bounties, which is really exciting.
It's easier for city government.
And then this is
for them to collect the money. It's more efficient.
Saving them time, energy.
Put the app on your phone.
I think it's great.
Yeah, well, you want to do it.
Who wants to fund? Anyone looking to fund a
Bitmeter?
Bitmeter. Don't steal it.
Next question, Chris was second.
All right. Hey, this is with reference to all these ideas about private blockchains. I'm curious, how does Wall Street handle the issue of conflict of interest, or is that like even in their vocabulary?
That is their vocabulary.
They don't care about that.
They don't care. I mean, who's going to tell them it's a conflict of interest? The regulators don't have a handle on it to begin with.
Wall Street
I'm not sure that.
conflict of interest.
Yeah. That's.
Specifically, so that there would be the guys that are running, they're basically managing the settlement system, but also ones that that's the structure it is now, right? So SWIFT is owned by a consortium of banks. DTCC, consortium of banks. The biggest bond trading site, consortium of banks. The biggest foreign exchange trading site, consortium of banks. This is why I think that there's a rift, or at least a possibility that they can form a consortium around a blockchain solution to settlement. And because of the way that the Federal Reserve is structured, where the kind of interface between the Federal Reserve and the US banking system are, they change numbers all the time, so things like 21 dealer banks, right? That's how Treasury securities get out of the market, that's how monetary policy is implemented. You've already got this kind of like core group of banks who fund the Federal Reserve of New York, and it's a very integrated system already, with huge conflicts of interest through it.
Look what happened with LIBOR. I mean, LIBOR is
all of these systems are built around consortiums that were supposed to keep us protected.
And used it to no end. So
your concerns are right, but that's exactly it. That's precisely the reason why I think it's critical that a decentralized solution is maintained. And these guys suggesting that that's actually possible to have one that isn't, which is cool. But if there is an attempt, if there were to be a possibility, I think it's important that there's a strong debate around the need to keep it decentralized.
Thanks. Healing.
When Blind Masters started digital asset pooling, there was some criticism that Wall Street banks were now taking advantage of this Bitcoin technology to basically do their work for them, because our digital asset holding was going to, use Bitcoin for transactions and settlements, something that would ordinarily incur non-zero costs for banks, but now can be done on the Bitcoin network for So I was hoping to hear both from Silicon Valley and Wall Street on this perspective.
What's the like question part of it?
Oh, okay. So what's your view on the perspective that Wall Street banks are taking advantage of Bitcoin network to do low-cost transactions while they're still charging significant amounts for settlement?
Use cases for Bitcoin, I'm all for them. So I think it's fine.
But at the same time, it does get to the same point. I mean, what they create as a model is centralized and controlled, then I think at the end of the day, it's inherently good that you're going to have cheaper settlement, faster settlement, and more efficient settlement on every level, because it will lower the cost of international finance. It will make the financial system far more efficient, and we'll all benefit from that indirectly in fairly significant ways. But at the same time, it's limited by the fact that as you point out, that it ends up being just a profit windfall for them, rather than something that allows us to totally open up the system. And that's the issue. I think it's a battle between just saving money as a whole for the system, or do we really want to reform this? Because the internet came along and made Wall Street, forced Wall Street to be competitive on trading, for example, right? So it's now $9 a stock trade. It really challenged a business model that was built around having stocks, having the power to charge brokerage commissions at ridiculous levels and get spreads and everything else that were far more wider than it needed to be, precisely because nobody knew what was going on. The internet comes on, opens it all up, but what does Wall Street do? They found out a new way to re-centralize information. It was the credit default swaps and the collateralized debt obligations that were the vehicles that allowed this incredible housing bubble to take place and ultimately blew up the financial system. Right? So it's not just about their capacity to control information and make money. It's the fact that there is a relationship between that power and the stability of our society itself. And so maybe that goes further than what you're asking, but ultimately I'm not saying digital asset holdings themselves are probably they've got some fantastic ideas, but it's really going to be important to watch what shape this takes, who runs it, and what it means for the whole relationship between Wall Street and us.
And the real problem with the banks isn't so much that they would take a technology and use it to offer a service. I mean, there's no problem with that. To me, the real problem with the banks is that you have had this slow accumulation of concentrated power, and it goes beyond Bitcoin, it really goes beyond technology, really. They are able to leverage what they have down in Washington, D.C., down in state houses and in federal houses, and use it to hold on to the power for themselves. Bitcoin's success in terms of the banking system will be seen in the degree to which a decentralized open system on a global basis diffuses that power and saps that power and forces them to respond to it and offer better, more honest services. I don't know that that's going to happen. That's what I want to happen. I don't know that that's going to happen, but I think that's the real crux. I mean, it's not a technology, can it be used by the banks? Of course it can. Will the technology put pressure on them, and will it sap some of that power that caused 2008, really, that disaster? That's the kind of thing, that's what the fulcrum that I see.
And hopefully Bitcoin stays an industry where everybody doesn't start raising fees just to match the banks. I mean, that would be tragic. Right? Don't do it.
You gotta make money.
You guys are trying to do?
So in 2015, will crypto companies collectively receive more than $1 billion in financing?
It's really relevant.
Let's see here. It's going to be interesting. There's going to be two things that happen this year. One is I actually do think that there will be a couple more venture and big institution players who jump into the space. Does it hit $1 billion? I don't know. But I think it will be equivalent, if not a little more than. It's not going to be. Maybe it's not 20. Within 12 months, let's say. Let's say early next year. Also, it could be a part of my thesis. And then also there will be, 2 years ago we had a lot of early seed financings of a lot of Bitcoin companies. There will be a drop-off within the next 6 to 8 months of some of those companies, unfortunately. And it's just the nature of like timing, really, whether or not the Bitcoin is, whether the wave's going to hit or not. And so there is a balance of both that will be happening in the next year. There's going to be a few very strong players who are going to be entering the space and getting backed by a lot of money, and then there's also going to be early players, and you're going to start to see a couple of them get knocked out. And it's going to be, it's sad but good. It's sad but good. It's going to, it happens with all spaces, but it's so you guys are all startups. Figure out how to not die. That's
Thanks. I have since this is Wall Street, and in the beginning of this panel we discussed that there are a lot of moves from Wall Street getting into Bitcoin in different ways. It would seem that people in these firms who are observing this would go, Bitcoin is, things are happening. Like my firm is whatever moving in, that they would start speculatively buying Bitcoin, which would have driven the price up, right? And clearly we would see the exact opposite of that. Like, what are your thoughts on that dynamic?
So I can give you like one. So the question is just on like speculation, Wall Street. Why are more people buying Bitcoin? It's the exact opposite. Well, as a trader, let's use China as an example. In China, they would like to buy when the price is really, really high, and they like to sell when the price is getting really, really low. So it's kind of this really, really strange phenomenon. But if you see the price in China, it almost always goes up first before everybody else, and it always goes down more, just because there's more volume. I think, just right now, it's just the nature of the volatility of Bitcoin.
I mean, let's remember that it actually isn't very easy for. I mean, when you say Wall Street buying that, why surely they'd be buying it? If you mean hedge funds and Wall Street banks themselves, for the most part, you can't. There's not.
I'm talking about individuals, though.
Well, individuals, yes. But so individuals, there certainly are. I mean, we know there are individuals who buy, and I don't think it's worth carrying much better perspective. But certainly, the more when we talk to the guys, whether it's the Bitcoin Investment Trust, or Barry Silver's group, or various others, it does seem something of a wellspring of interest. It's clearly not huge flows of money. I think it would be a bigger impact than we've seen. But they're still looking largely for the tools as much as they're individuals. They're not necessarily the type of people who are going to want to buy and hold money on and trade by a bit stand. Right? So the development of ETFs, the development of more sophisticated services like Harry's, the kind of infrastructure that's being built out is also needed there for some of these high net worth Wall Street inclined people to get their feet wet. We hear that, and anecdotally all the time, that there's lots and lots of people who want to participate. But I've often shared the same view. Well, that's the case. Why aren't we seeing more about it?
I actually think there's actually not a buying because like right now, every day 3,600 coins are mined, and it's such a low price. Mining companies are selling it right away because they have to pay for their electricity and their equipment. So I would say most of the 3,600 coins are being dumped on the market, and that's what, almost $1 million. So in order for the price to stay the same, every day there has to be $1 million money going into the Bitcoin market by other people. So if you think about that and multiply by 365 for a whole year, that's $365 million going into Bitcoin every year. And that's a lot of money. So
with the constant supply,
because there's constant
use. There's a lot of trading volume. Actually, I would say the trading volume now, because there's actually more exchanges, it's actually higher. It's the highest it's ever been. I think even transactions on the blockchain are actually the highest.
Yeah, and Bitcoin is designed to every 4 years the amount of Bitcoins produced get halved. So it's like right now it's inflationary. There's a lot of Bitcoins being produced, and price shouldn't matter today. Price matters in the long run, not in the short run. So I think a lot of people are focused on price, but Bitcoin is designed for kind of the amount of Bitcoin being produced getting halved every 4 years. So price will start stabilizing.
I'd say one of the challenges is in terms of, I'll say, buying in mass by a lot of folks on Wall Street is just a learning curve of understanding what Bitcoin is. Who's Satoshi Nakamoto? You know, I've spent time in New York.
Who is he?
Who is he? I'll tell you. People. He's on and when I spent time in New York, you know, I go into a meeting and there'll be 2 people who really get it, and then there'll be a few people who don't really get it at all, and then there'll be the thousands of people who also work in that building who have no clue, right? So I think what we need, I go back to the killer app, we need something to describe Bitcoin that's not the history of Bitcoin. I mean, it's a good book, but you know, now it's time to move on and say like, oh, Bitcoin, that's not
selling it. It's not time to move on yet.
Oh, Bitcoin, that's how I pay my parking meter. You know, we need something like that can capture very simply why we're using Bitcoin, especially in this country. And I think once that happens, then there'll be much more mass adoption. It's just the concept of, oh, maybe we'll use Bitcoin for settlement in Wall Street. And that's still a very conceptual phase. There's been a lot of concepts in Wall Street like that have been piloted and then killed. And so, you know, people are not putting it. Now, the forward thinkers, you know, the fortresses of the world, you know, the guys who do get it, they're starting to put 5% of their portfolio into crypto. And that's exciting, right? And that's where we were seeing a lot of ideas. But as Harry said, when the price is running up, it's herd mentality. Everybody's buying. When the price is going down, everybody starts selling. So I don't know, we just haven't had that real there yet, that real reason to capture the imagination of everybody to start buying, like the .com run-up for the internet.
So, I mean, I guess it's more of a comment because of there's a difference in the way the internet kind of grew and how Bitcoin's growing. So what I think is that what we were seeing in the early days of the internet, there was a lot of companies that were doing it, but the time frame it took for them to develop was a lot longer. And with Bitcoin, we already have a lot of infrastructure in place in terms of the internet and and everything that makes it easy for those last mile people to get access to Bitcoin. With a couple of startups like Coinbase or someone else giving them access to it. So it seems that there's going to be a lot more companies providing a lot more services, and these things might actually be a little bit faster than what we get normally.
What we have that the internet didn't have is the internet.
Right. which is the rebranding issue. I mean, like a lot of people are saying that we should rebrand Bitcoin, but when did the internet get rebranded?
Well, I think it was Netscape. I mean, I think it was when someone was able to actually interface with what this thing was. You weren't able to describe it for a while until you saw like access to information was actually that easy. That was the exciting part, and I think that we're finding that day trading of cryptocurrency might be the Netscape. We don't necessarily know yet of Bitcoin, but it's still yet to be seen what truly adds the value. Where is the true technology value of Bitcoin? But we do have the internet. Like things move way faster now. Like I'd say like we're warp speed as far as Bitcoin's concerned compared to internet, where they actually need to like lay the cables to be able to deliver internet globally. Like we have those cables already laid, essentially. Yeah.
Yeah, well, it is interesting, the comparison, right? In the early days of the internet, it was the techies with Usenet and so forth that were using the internet. That's kind of where we were the first few years of Bitcoin. Then you had the AOLs and the Prodigies, Coinbase, AOL. I'm just kidding. You have these few large companies that are kind of controlling access and providing the education, right? And then from there, then you have a groundswell of innovation and Google's and everything else that emerges from there. So that's the next wave that's really exciting. And the companies that are here and leading today can capitalize on that growth. You guys still have opportunity to capitalize on that growth and become one of those major companies too.
Well, thank you everybody for coming out to the event. Paul and Michael, if you guys want to do a short intro about your book, Once again, 25 books are available for whose companies, one per company, sorry, they ran out of books. It's from Bitfury, and you know, we got
Thank you, Bitfury.
So.
Actually, more important than the book is critical. Jared kind of wanted me to tell you that we're going to have a reception over at 20 Mission from 5 to 8 tonight, so if anyone's going back up to San Francisco, we're going to be downstairs at Nakamoto's from 5 to 8, and then upstairs doing God only knows what from 8 past that.
If you've never been, it's a very interesting building, so you should definitely check it out.
Yeah, so come up to the Mission and have a few beers and talk to us, if that's attractive.
The book clubs. Just read it. I mean, it's, we think it is the definitive book on cryptocurrencies and the future of money. There's another book coming out from the New York Times author who's going to try to claim that it isn't, this is.
You know, I mean, to even be objective about it, I think it's really interesting that you could see in 2013, there was a period in 2013 where probably a dozen of us journalists all realized at the same time, holy shit, this is a book, this is something that needs to be written. And we all kind of scrambled to get our deals and to get our publishers and to get a book written. And again, you talk about waves. I mean, these things come in waves, these understandings. You had techies and you had libertarians, and you started to have this sort of, you know, the media get it. And we're part of that wave. The books that are coming out are part of that wave. So we're part of the zeitgeist, part of the culture. Our book will come out, Papa's book will come out, and they'll all be part of it, and they'll all kind of build on that, and that's a positive thing for the entire industry.
I actually wanted to thank you guys actually for writing a book like this, because having two authors from the Wall Street Journal actually write something like this, actually it's great for everybody. So I just want to thank you guys for writing it.
Thank you very, very much, Tina, Thank you for having posted this. Thanks to Bitfury for the support that they gave us yesterday and today for this. We are really very, very thrilled with the support that we've seen out here. So,
well, thank you to each and every one of you for flying in, three of you, and a bunch of you for commuting, except, well, Adam.
Thanks for coming across the hall. Thanks for coming across the
I did.
Wait, there are those 2 books. Did you guys come up with some questions, one each, to ask somebody for audience members that are not boost to be able to win a book? Too hard? Maybe you just
who? I've got no idea how.
Harry has one.
Who is Satoshi Nakamoto? I can neither confirm nor deny that I'm Satoshi Nakamoto.
I was just going to say, like,
I just don't know the technology, so I could say something about, well, that's obvious, but I mean, who was the founder of Mt. Gox? Right?
Anyone?
No, good, okay, so thank you, all right, there you go. Good, it wasn't good, I'm glad that it's there.
I was going to say, what was the first item that Bitcoin was used to purchase? What was the first item?
Yeah.
Okay, what was on it? What was on it? You think you're clever. What was on it? Oh, that's an even better question. All right, bonus question. How much was spent on the pizza?
40.
Well, how many Bitcoin? How many Bitcoin? How many Bitcoin?
He was answering
10,000, right? He was answering. It wasn't.
Okay.
10,000.
Was it 10,000?
10,000. Most expensive pizza.
Now.
Right.
Then it was real cheap.
Yeah.
And it was, you're right, it was about 40 bucks.
Yeah.
Yeah.
2 pizzas, remember?
2 pizzas.
Florida pizza, by the way. Going back to a Florida pizza, give me a break.
Is anybody here from Florida?
Just not your pizzas.
You want to say something?
I had one last quick question.
Oh, sure.
Yeah, so several months ago, I actually answered.
Just take the mic.
Okay, hey guys. So several months ago, like late 2014, I don't know if you guys know Snapcard. They actually came from here, USBC.
Plug, plug, plug.
Yeah, and I was actually a brand ambassador for them. And what I was doing was contributing to the Integrate SF campaign. And so we would go as a brand ambassador. Excuse me, as a brand ambassador, I would go to SF, even here in San Mateo, try to visit as many small businesses as I can and get them to accept Bitcoin. And I visited over 200 businesses, and I got around like 30. But like one thing that I noticed was a kind of a disconnect in a way. You know, not a lot of these small businesses, they don't really know that Bitcoin even exists. So what are you guys' thoughts on what would it take for Bitcoin to actually reach the mainstream? And because I got really good questions from many small business owners. They would ask me, how many people who own Bitcoin would actually spend it? So what would it take, number one, what would it take for people who have Bitcoin to spend that Bitcoin? And two, what would it take for Bitcoin to reach mainstream?
First off, I would say if you got 30 out of 200, that's actually, I think, a pretty good hit rate.
It's great.
Yeah, I don't think you should.
They should have kept it. Are you trying to get a job somewhere, or what's going on?
Second, I would say my idea of the bit meter is the killer app. But actually, it's a joke. But I mean, it's kind of serious. You want to come up with something that is that people can use in their everyday lives, and that is simple, and that has some utility, some value to them on a very basic level. I really kind of like this idea of the meters. Like, if you could have a mobile app, and you could feed the meter on your mobile app, and you could use Bitcoin.
We already got the name for it.
Connection, right? Connection, right? I'm coming up with ideas like that. But don't you think it's something like that, Adam? I mean, it's something that kind of gets to people in their daily lives.
Yeah, well, so I think right now we're at a stage where actually from the merchant standpoint, there's no downside. Like, there's no chargebacks, there's no 2% fee, there are a lot of reasons to accept it, which is why you probably hit 30 out of 200. Like that, it's like, okay, yeah, sure, I'll have a free Android tablet and, maybe hide it and accept cryptocurrency. Amici's Pizza actually accepts with Snapcard. Was that you?
Oh, I visited a couple here in San Mateo.
Okay, well, Amici's, I spend it there every once in a while. But there's this problem, like, I'm trying to spend Bitcoin every week now, or actually every day. I generally spend it every day now. And a lot of people want to hold. My partner Brayden, he just holds on to his Bitcoin, calling you out. And there is a little bit of a hoarding mentality, and then like the people who hoard are like, yeah, well, it's a store of value, like, and like they have that argument where they're just like, we're actually the ones setting the price of what Bitcoin is, and it turns out velocity of money is actually what sets the price, so it makes no sense. And so I think that there needs to be a stabilization of the currency. So actually, what Harry's doing, where he's creating liquidity in all these markets, is really, really important for that people to actually start accepting Bitcoin. I think Bitcoin works when you don't see Bitcoin anymore. When I'm spending USD and it's in the background, it's Harry buying the Bitcoin from someone, but it's transacting over the pipes that is Bitcoin. So what is the use case? It's somewhere where it adds true value. I mean, when you think about fundamentally, I'm stealing a quote from Randy Reddick, who founded Square, but when you think about what technology actually is, it's something that saves time. And so it's the key use case is the thing that saves the most time and the most efficiency for people. And I think it will be in a different market than the United States as far as what ends up working. Potentially the UK if they're on this like huge financial kick. But I actually think it adds value out in Africa, in Argentina, and those places. So I would say that I'm not going to be able to tell you what it is. I actually think that there are a lot of really great use cases in this room, whether they be microtransactions, remittances, cross-border payments that are not necessarily B2B. Like those things are they solve efficiency problems. And they solve problems that are big for people. So that's what I would say. I think it's sort of, I'm going to move back to my tsunami metaphor, and like there are companies who are solving major problems. It's a matter of whether or not we're going to hit land soon enough. And that's sort of where we are.
I just wanted to add one point. I think closing the loop too, or having products that are only available in Bitcoin are really important. Like where you can take USD out of the equation. So for example, if consumers buying and then you like the merchant who buys from a vendor and that entire thing is all Bitcoin. That in some ways would actually help spread a lot more adoption as well, because they're not just always refer back to
there's interesting new markets that could open up where a service that never received payment before is now remunerated in Bitcoin, right? So you've got, that to me is an interesting possibility where something that hasn't yet been marketed is only marketed. There are interesting cases that are going to come to light.
And what you were doing was really important, which was educating 200 merchants who had not heard of Bitcoin. And like that was actually a hugely valuable thing. I like that Snapcard did that move.
That is very valuable. Although I could make a joke and say I should only accept Bitcoin for your book.
That's a great idea. You should give people a discount, actually.
Well, I've done that very nicely with their Amazon sales. We get that. You'll see that they're selling our book next door.
Yeah, they'll be
there. Discount.
Yeah, they're not to trash booksellers, but
we don't get to choose what
we don't get to choose where it gets sold.
We're not selling it.
But we actually tried really hard. We did a bunch of events in New York, and we wanted to have people come out, and we wanted to sell it and have it taken for Bitcoin. We had the hardest time, and we ultimately failed.
I walked a number of booksellers through who they would talk to. BitPay, you're going to do this. You're going to immediately put it into dollars for you. It is going to be just like what Microsoft just did and what Dell just did. And these big names, you heard them right. It's not hurting their bottom line. Everyone's okay. You can do it too. Okay, then it was going to cost them zero. It was going to be set it up in 5 minutes. The KYC provision, and that was it. It was the easiest thing in the world. They were, well, do it, scary. It was very disappointing. This is a very old. We're talking about. The industry hasn't moved much beyond the Gutenberg press. So, it's still an old world.
They'll get it. They'll get it. They'll be last, but they'll get it.
Thank you guys. Thank you.